it might go to 32 and then drop to 29 and shake out a lot of people and then go back to 36, you know. So if it's for real, that's the sort of thing it's going to do.
Here at Liberty in Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
This is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend David Smith, the senior analyst at the Morgan Report. David, thank you so much for joining us today.
It's good to be back.
It's great to have you. And what I wanted to first touch on is the turmoil we've been seeing in the markets recently. It seems like it's been a wild ride across markets. Now, you've recently mentioned, we were talking off air, that there is a lot of unrest in the markets, but you can position yourself so that you can kind of make it through this unrest. So your perspective on that, how do people position themselves to really weather the storm that we're seeing right now?
Well, one of the ways, of course, is to be not leveraged and not have more than you can sleep with at night. That's kind of basic common sense. But also, sometimes people just have only silver and gold stocks in addition to their physical metal. And it's easy to get shaken out when the metals are down. And sometimes, now, what we see now, just about everything is dropping in sympathy with the Fed's changing its stance on the interest rates. And I personally believe they're not going to be able to raise them much higher than they are. And also, the metals will sort themselves out sooner rather than later. They're weak today as we talk. But if you have, let's say, maybe a couple really well-selected copper stock plays and one or two uranium and maybe a digital miner and things like that, maybe a nickel play, chances are over a period of time, not day to day, but over a period of weeks, one of those or more of them will be moving in a different direction, perhaps than your metals are at that time. And so you go, well, I'm making some money here, or I'm not losing as much, or whatever. And this gives you not only a psychological buttress, but it also is an opportunity to make a little extra money when these others start moving on their own metrics.
Now, some people are expecting kind of a sell everything moment, and that's largely what we've seen. A lot of sectors moving down at the same time as, fears of a recession mount. Your take on that? Do you see that as a possibility, and how do people protect against that? Is your strategy there? Do you think that will be good even in a moment when multiple sectors are moving down at the same time?
These things aren't usually recognizable except after the event. I think we've seen a couple selling events like you're discussing already. Whether there'll be another one, I don't know. The market opinions are that we could have a lot further to drop after this relief rally, and then other people feel it could be more substantial. I think it's worth being conservative in here, especially if you have most of what you want. The problem with the physical metals, which you're associated with, is that if you wait until you get some kind of a super bottom, the cost of buying them, the premiums tend to be very high as well too. So let's say you bought today with, I don't know what the premium might be in silver, several dollars for the 1 ounce, bullion coins. But in a sell-off, you could hit the exact day when maybe silver dropped $1.50 and then close the next day $1 higher. But you might pay another $2 for that ramp up in the premium than you would have. In other words, you'd pay more than you would now buying at a slightly higher price. That's counterindicated, but it's happened several times in the past. And it's still kind of going on now. So when you can buy when things are relatively quiet, you'll tend to get a better price, assuming you can find supply, than if you try to wait while everybody's selling in the paper market, but everybody's buying in the physical market.
It's very true that when we see a downturn in the price, premiums will often increase. But when it comes to, I guess, investing more in like mining stocks and other commodities as well, do you think it would be prudent to have some cash on the sidelines waiting for an opportunity going forward?
I absolutely do. And some people look at cash as a missed opportunity that they can't buy their stocks that they really like. But I've been surprised. I've been raising cash in small amounts over the last few sessions, selling things that just aren't performing as well as others. Now, all of these are dropping, but some are dropping more. They don't have the dynamics that the better stocks I hold have. So why would I want to let those continue to drop and not take that money, even if I'm down quite a bit, and put it into a cash position? Because things come up that you're surprised about. There can be an intraday sell-off in a stock you like a lot, or you find a good deal on some bullion, and then you have that money. And also, here it is again. It's so much about psychology. Even if you don't add more to your position, the fact that you know that you could says, well, I could if I wanted to, and if something comes up, I will, rather than I can't do anything unless I sell something. So that, these are all psychological tricks that help you stick around and not sell on the bottom of a drop where silver and gold like to break support and then turn around.
Now, you recently wrote an article about how a lot of investors will actually miss the opportunity in precious metals going forward. And I think it's important to always kind of be contrarian in some view where we might be hearing certain things from the mainstream media that, oh, this is the time to buy or this is the time to sell. But we have to often think for ourselves as investors moving forward. And a couple of the points that you made were that as precious metals take off, we may hear a lot of people wanting to take profit at that time. Your perspective on that, some of the reasons why investors will miss the opportunity to take advantage of the coming upside in precious metals?
I think it has to do with a couple things that have already happened. And I can understand why investors would feel this way. But again, like you say, you have to go against your own emotions sometimes. But you look at 2016, we had a 6-month, barn burner rally there in the metals and miners, and then it was all given back over the next 18 months. And then about 2018 into 2021, we had all-time new highs in gold and a strong silver market. And so people are, they've seen this, and it's human nature. They go, well, is this going to be another one of the same thing? And we don't know. But if you start selling right away, oh, I've got a decent profit here, then if it really becomes the real deal, which I think we're getting closer to all the time, you may not have much of a position left. And so do you want to sell at $27 silver and see it go to 44 and have a third of what you had? I think selling some is important, but maybe one of the things that helps me is if I want to buy or sell, I tend to figure out an amount I'd like to sell or buy, and then do half of that. And that takes some of my emotions out of the game, because if I'm emotional about it, I might do too much. I might accumulate too much at one spot or sell too much at one spot. And this way, because many people have waited, as I have, for many years for this, they're doing some buying and selling, but basically accumulating. And why accumulate and put all that time in, and then when we're fairly close to the cusp of something like a one-time event happening in silver, which I believe is on the way, have a fraction of what you had saved up over all those years because you got back to the green and you took a profit, and then you saw it go on and on and on, and you have a small amount. So there's a price to pay for that as well.
There are some key levels that people are looking for example, silver to break the $30 level to really signal that we are going to have this next leg up. You mentioned in the article that people will have recency bias before this breakout occurs. Can you expand on that?
Well, just like we were talking before, that these things always fail. It goes up to 30, 32, it's going to go back. Now, it might go to 32 and then drop to 29 and shake out a lot of people and then go back to 36, So if it's for real, that's the sort of thing it's going to do. Another thing allied with this concept is the idea of support and resistance levels. And I make a distinction between a linear advance, which is what you see in most bull markets and even impulse legs, where there's a fairly steady 45-degree angle approach, increase in prices over time. And you can get on to that and add more and take some profits. That's a linear advance, and it's kind of predictable in a way, assuming that the move continues. But then there's an exponential advance when instead of a 45-degree angle, it starts moving at a 60 or 70 degrees. And that's approaching a blow-off phase. And exponential moves cannot be predicted easily. Support and resistance don't generally hold on the chart. So if you sell at the first or second resistance level, it'll just shoot through that like a knife through butter. And that's what happened in 2016. And I believe it'll happen in a major, major way when we finally get that big move that we've all been looking for. It's going to take out charts that look like they're resistance levels on the chart, just like standing still. And when silver's going to rise $5 a day, that's going to take out a lot of resistance levels.
No, I can definitely already see people commenting right now of like, well, silver's at 22 right now, or it's actually, as we speak, dipping below 22 right now. So it seems like, this hasn't happened yet. We've been talking about this for so long and silver hasn't broken out. Your perspective on some of the signs we should be looking for to show that, yes, actually this time is different before we see this breakout?
We will be looking for a low volume drop out of support and a turnaround. One of the things I like to look for, which is very seldom seen in the liquid market, is a 1 or 2 day island reversal, where prices drop with no trading on a particular day. The next day they're lower and there's a gap on the way down. And then a day or two later, the same thing happens on the way up, and it creates an island where no trading took place on a certain place on the way down or up. Those happen very seldom. But if I see that in the physical market or in certain stocks that have a lot of liquidity, to me, that is a tremendous indicator. And I want to pay attention to that, because if that is not violated or the gap's filled within a few days, that gap could last for months or even years. And I want to honor that until it's either proven or disproven, and it will then generally be proven or disproven within a short time. So that's one thing I look for.
So it's low volume in those price ranges. Why is that a bullish factor?
Well, it could be a high volume in the selling that led to the island, but just let's say it's 22 and it drops to 21.20, doesn't create an island and comes back up the next day or so. But on the drop to 21.20, maybe the volume was a third of what you'd been seeing, or a half. That's an indicator that the selling is waning, and people are waiting to get in and buy. And so that the strong money, the strong hands are in there buying that selling pressure. But if you see a big volume day, that may indicate further downside ahead. And these are things that are never guarantees. They're playing the odds, but they are playing the odds in a way that can end up in your favor if you know how to interpret them, and if you can keep your emotions under control.
Now, you mentioned in the article that also silver typically lags gold. So how should we be expecting that in the next leg up?
Gold may lead. It doesn't always lead, but it may lead. And it may be a little more aggressive than silver. And silver may sit there for a while, and then all of a sudden you'll see a big jump, $1.10 on the upside, And this will happen throughout the move. And when it really gets underway, which I was a participant, along with David Morgan and others, we didn't know each other then, but we were participants in the physical market and the futures market in 1979. You would see sometimes gold would move strongly for 2 weeks and silver would hardly budge. And you go, what's going on? Well, nothing's going on. Gold and silver are very closely correlated, as high as 90%, but not on a day-to-day basis. And then all of a sudden, after a week or two, suddenly silver will be up $6. So that's the sort of thing you have to trust in, that the market has kind of got the Janus doors, so to speak. The Romans talk about the two doors that open, each way. So that's something to consider, and keep that in your bag of tools so when you see it, you'll understand the meaning it may have.
Now, one of the interesting points that you mentioned in the article has nothing to do with technical analysis. It has more to do with really making sure that the silver that you think you own, you actually do own. And when investing in silver, there's quite a few different ways to invest in silver. You can invest in the physical metal that you can hold in your hand. You can invest in allocated accounts and unallocated accounts, or you can also invest in the ETFs. So there's question with respect to some of the ETFs or the unallocated accounts is, well, is your metal actually there? There is an introduction of counterparty risk there. So can you expand on that? Some things that our viewers should understand and consider before really putting their money into some account or ETF.
in the most basic approach, there's a saying that if you don't hold it in your hand, you don't own it. By definition, when it's in your hand, stored someplace for you that's secure, preferably not in your home, you end up in a situation where you know it's yours. No one else has a counterclaim on it. The next step is to buy from a very trusted metals dealer such as yourself. And there are several others out there as well too, but make sure that you get it and you know that it's real. It's the real thing. It's not counterfeit. And you're not paying, massively overpaying for it. You're not buying collector metals, things like that. And then the next thing is a lot of people, and I do some of this, I store some of my metal in an allocated situation with my name on it. It's literally in a box, not a bank deposit box, but a metal storage box at a secure facility with my name on it. It's not mixed with anyone else. Unallocated is when you have it with other people. It might be ounces of a 1,000-ounce bar. It might be metal that's mixed in with other people's ounces. It could be a variety like that. And so preferably go for allocated when you can. There are unallocated possibilities that are okay. But again, each time you move away from silver in your hand or gold, you move away from the reliability that you have that it's actually yours. Getting into ETFs, those are trading vehicles. And anyone who thinks they're going to get the metal from an ETF is going to be sorely disappointed. Most of them have things in there that say they don't deliver, or it's very expensive, or you need a lot of metal to do it. It's not a cost-effective way. They're trading vehicles. And some of them just don't have all the metal. And they even have a situation where they say, we can pay out in paper money if we have to. So you don't even know that you're not even subject to getting metal at all if it suits their situation and they don't have it. So that's really the way you want to approach it, I believe.
And another key thing is that taking delivery from some of these ETFs can be very difficult and really impractical when it comes to just the average person. You sometimes have to take delivery of millions of dollars worth of metal at a time. So really taking delivery is not an option for most people. That's
really true, not a feasible option. And market prices can change a lot during the time in which it takes to put this deal together for you. Another thing too, which I really didn't think about too much until the last 6 months, I think it's for people that store internationally. People think about, well, let's store it in Australia, at the Perth Mint, or let's store it in Singapore so that you don't have the value-added tax, things like that. If you're trying to take delivery on that at some point, you could find out they could take several dollars an ounce to get your silver from Singapore or the Perth Mint. So the cost can be very profound as opposed to buying it from a North American source. I think most of our audience is in the Americas, Canada, Mexico, the United States, Latin America. And so consider that, you have some of it where you can reach it for sure. And some of it, if you want to have it in a different jurisdiction, make sure it's not so far away that the cost of getting it to you almost obviates having it in the first place.
And you made a good point. I think it's important what you actually purchase as well. Making sure that the bullion dealer is reputable. Definitely look into the bullion dealer you're working for. And also, it is notorious in this industry for bullion dealers to push numismatic coins instead of just the bullion product because margins are higher there. So make sure you know exactly what you're purchasing there and make sure you're not paying too much. I think that's a very good point there.
It is. And, if it's a coin that you like, let's say it's the last year when they put out 2 American Silver Eagles, and you go, I've just got to have that year. I want both of them. You're going to pay a premium. You might as well get a graded coin on that. But you're not going to turn around and sell it. You may never sell it. It might be for your grandchildren, So, and I once bought a 4-piece golden buffalo set. It was an ounce, a half ounce, a 1/10 ounce, and a 1/4 ounce, I believe. It turned out they only made that for 1 or 2 years. I didn't know that at the time, but I've always loved that coin. I loved it when it was a nickel, the buffalo head nickel. I never thought I'd see it as a gold coin, and I bought that for that reason. I paid the premium for it, but I did it intentionally as opposed to buying 100 gold buffaloes that were graded MS-70, and now I find out that they're selling for bullion price. You know what I'm saying?
Definitely. I mean, obviously, if you are looking for collector coins, then you can go that route. But most people who are investing in precious metals are looking to invest in the metal itself. So collector value, should be very small compared to the metal content that's in your coin. But so when it comes to, I guess, any last thoughts you had when investing in precious metals, some other things that people should consider?
One thing I'd like to mention, and I'm an ambassador for this project, so I do have a vested interest in it. I've also invested in it, and that's the LODE Digital Silver and Gold project. It started out as silver, it's now silver and gold. And this has blending the idea of a digital coin that's backed by an identifiable amount of silver and gold in vaults, in several areas of the world in vaults. And this is going on to the blockchain. So it's going to be an inviolable record that, yes, that metal is really there. And we're seeing very increased interest in the LODE digital silver, gold, and coins. And whenever we sell more, we meaning the project, they buy more metal from metals dealers such as yourself and back those coins and tokens. And so it's a project that I think people will see as a kind of a alternative to the physical, and they can actually redeem it for the physical if they want. So that's something to consider. Anybody that would like to take a look at that could go to agx.lode.one, and there's a content-rich site there with a lot of FAQs, and there's even a chat room that they can see. But I'm involved in that, and I think it's going to continue to grow. And it's just one more way to hold the king of metals, gold and silver, in a safe, secure way, and gives you a little bit more of an option rather than going for some other country that's far away and having to pay big premiums to store it, because once you buy it, you don't have storage costs. So that's something to consider.
Before we let you go, can you share with the viewers everywhere else that they can find your work?
About 3 or 4 times a year, I write an essay without compensation to the Prospector News. I have a current one in there now, which discusses that I believe the greatest bull market in all time across the board in commodities is staring us right in the face. And we're going to see these places go to the moon. There's a chance to get in and get out. And so adding well thought out positions and thinking about how and when you would get out is important. And, I mentioned kind of a shout out to Dave Forrest, who I subscribe to the Casey Research Letter. I don't get paid for saying this, but he has a wonderful program that will be out June 8th called Super Spikes. And it ties right in with my belief that I wrote about a couple months ago, that we're going to see these things going on moonshots over the next period of time, probably 12 to 18 months. And it's going to be some fabulous opportunities, not only in the physical metal space, but also in the mining sector space. And it might be worth people taking a look at that promotion he's running and seeing what he has in mind. But I'm totally in line with what he's thinking. And I think those people like you and I and others who have held on to our physical metal for a long time, we're getting very close to being rewarded for that very often painful experience. And not only that, but gold has gone up at a compound rate. David Morgan discussed this just the other day, of 10% for the last 20 years, even though it's down a couple $100 from where it was. So it has actually exceeded the S&P 500 in terms of growth substantially, even before the S&P started dropping, as we've seen now, which is down about 15%. So don't think that you've been left out because your metals are struggling now. You're still ahead of the game in many important respects. Plus, you have honest money that can never go to zero.
All right. Well, David Smith, we really appreciate your time. Thank you so much, and God bless.
Thank you, too. Take care, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.